Alright everybody, welcome back once again. It's Fabio Mezzogori here behind the mic, and this is the financial market preview. Thank you so much for joining me. If this is the first time for you, in this video I'm going to recap all the highlights of the week just ended in the market, along with some example of what I'm gonna be looking for in the upcoming week from a technical point of view. Before hopping into it, please give me a favor, hit that like button for me. This is the best way you can support me to shoot more video. If you like the video, let me know your thoughts in the comment below. Also, if you have any suggestion, any thoughts that you want to share with me, please do let me know. And if you haven't done it already, hit that subscribe button for me and make sure that the notification bell is hit so you don't miss any new video. Now, let's move on to talk about what happened in the market this previous week. Alright, so as you can see, from a fundamental point of view, nothing really major happened during this past week. Maybe you're just interested to know that on Monday came out the news that Warren Buffett sold its 6.5 billion of equities in April in his airline portfolio, booking nearly 100% loss year on year. In his portfolio, he had several airlines companies, including American Airlines, Delta, Southwest, United, and so on and so forth. He decided to take the hit and book him nearly, again, about 100% loss on his portfolio. Now, apart from that, on Tuesday, as you can see here, Beijing reported export rose 3.5% in April, of course, year on year, beating the market expectation, which was minus 15.1%. Apart from that, generally speaking, during the non-farm payroll week, nothing really major happened. And as you can see, Friday non-farm payroll came out and it was registering 20 millions, jobs lost in April. And I just wanted to put into a comparison of when this happened during the great financial crisis, when the worst month was 874,000. So if you're going to compare this number with this number, is just incredible. So in the month of April, in the US was reported 20 million jobs lost against 874,000 during the great financial crisis in, let's say, its worst month. Now, this is a quick recap of what happened during this past week. And the next week major events instead are on Monday, which will happen during the night, or if you're based in London, this will happen overnight for you as well. We will have the Japan gross domestic product, which could be interesting because it's gonna be the preliminar. On Tuesday, we have at 10 o'clock UK time German ZEW, which is a survey. And again, nothing to be really worried about because it's just a survey. However, it's gonna be interesting to see what the number will be considering the coronavirus situation. And on Friday, we have the UK retail sales. However, it's gonna be related to the month of April, so it's not gonna be any forward looking. This is really what happened in the previous week and a quick anticipation of what could happen in this future week from an economical point of view. Now, with that being said, let me just start to share with you what could happen in the market in this upcoming week. The chart you can see in front of you is the chart of the S&P 500 on a daily, and as you can see, from the big sell-off that we had until about 3-4 weeks ago, the market is now creating new higher high and new higher low, all right, until this point right here. Now, with that being said, from a technical point of view, this market is absolutely in an uptrend, or at least in the way I read the market, this is absolutely in an uptrend. With that being said, the prediction, we know that the market now is currently in an uptrend, so the next prediction is where this market is likely to go to. Analyzing the daily chart, the point I have identified already for me is gonna be 3,000 mark, which is just a little bit a notch above our previous current structure high. And don't consider the line itself, but consider an area. And also the same area, there are several other reasons why this market could stop right around the same area. We had previous high resistance that has been printed in September 2019 in exactly the same area. And also, if you are familiar with Fibonacci extension, and we draw our Fibs extension from our, let's say, last swing low to swing high, in the same area we also have 127 extension. Okay, so in the same area there are many reasons why this market is likely to get there. And from a daily, for me, it's quite difficult to get involved in this market because of the, let's say, from the point where we are trading at the moment. It's difficult from a risk-reward point of view, and also because the stop loss is going to be quite bigger, considering the fact that this is a future market. With that being said, if we drop down one time frame, we go on a 4-hour chart. As you can see clearly, the market is usually not moving in a straight way. Okay, market usually creates ebbs and flows until the market reaches the point where you are looking for. With this knowledge in mind, if you are going to look at this chart right here, we are creating what is considered to be an advanced pattern, because this kind of formation, this kind of ebbs and flows, along with Fibonacci ratio, are the basis of the harmonic pattern or advanced pattern, if you like. In this specific situation, if we consider this point right here our X point and this our A point, this is going to be our anchor leg. Okay. Now, with that being said, we see here that the market didn't touch 618 retracement, so this is still to be considered an advanced pattern in the forms of a bad pattern. Now, the bad pattern compared to the Gartley pattern is a little bit better because the completion, such as the D point, comes a little bit higher and is going to be exactly the 886 from our X to A. Okay, so if you draw your, let me draw it again one time. So if you draw your Fibonacci from your X point here, which is the starting point of your anchor leg, and you go all the way down to the potential A point, as you can see, 886 comes right at 29.43, even if you're trading the future market. Now, with that being said, let me draw the pattern for you so you can see a little bit clearly. X, A, B, C, D completion right at 29.43. Now, we are almost there. So it's possibly that already on Monday we will be there as soon as the open. However, this pattern is going to be compared with what we said before. On a daily, we identify that the market is likely, if it will continue to go higher, is likely that it's gonna go higher at least to around between 3,000 and 3,032. Okay, around this yellow box. So this pattern, if you consider what we said just before, is gonna be completely in the opposite direction. So in the way I trade this pattern, actually, you can trade this pattern any way you want. You can also play a sell limit order exactly at the same price or a little bit below or above, based on you. However, in the way I personally trade this pattern, what I'm gonna be looking for as an entry reason could be any kind of exhaustion. Considering the fact that we are counter trend, what I'm gonna be looking for is a kind of exhaustion around 886, so around this yellow box, or a little bit higher around our X completion point, such as here around 2965, 2963. In case something will happen, some kind of exhaustion will happen, and by the way, with exhaustion I mean some kind of technical reason. It could happen in the forms of a reversal bar, a double top, or another kind of advanced pattern in the same area on a lower time frame. It could either be the 60 minute or the 15 or the 5 or whatever other time frame you will consider. If nothing won't happen and this market will blow through these levels, now on a 4 hour it's difficult again to find an entry point for me at this point. However, if you drop down one time frame again and you're gonna go on a 60 minute, let me delete this pattern so you can see it clearly. Let's start to consider from this point right here, okay? We have our new high, new low, new high, lower low, and higher high once again right here. At the moment, what I'm gonna be looking for is a kind of pullback into this area, and again what I'm gonna be looking for is a kind of exhaustion in the forms of a reversal bar, double bottom, or whatever it might be, that, let's say, it gives me this kind of confirmation that I'm looking for in order for me to shooting up at least into this area, or maybe even higher into our X point. All right. From a daily point of view, we already consider in our analysis that this market is, if it will continue higher, is likely to go into this area right here. So we have a little bit of space for for us to get involved until this area right here. Now, the best point for me to look for an entry reason from a technical point of view is going to be this area right here in this yellow box. Why is that? This is because I have many reasons. As you can see here, this area that I have highlighted with a box, with a rectangle, yellow rectangle, has been tested many times in the past, and we failed to break through that level many times. We failed here, 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 here. All right, so we failed many times, and eventually we broke through with quite a little bit of strength, if you like. And also, if I'm going to plot the pivot points on the chart, as you can see, the pivot points that, let's say, the projection of the pivot points that's going to happen on Monday, in the same area we have also our pivot points. If you are familiar with pivot points, are basically the potential support and resistance of tomorrow based upon today's volatility. So we already know beforehand, this is the reason why this is considered to be a leading indicator, okay? Pivot points is considered to be a leading indicator for the fact that we already know where this point of support, potential support and potential resistance are based upon today's volatility. So we already know that tomorrow, when the markets open this night, Sunday night, these are going to be our potential support and resistance for Monday, based upon today's volatility, of course, or actually Friday volatility in this specific situation. Now, if we drop down on on a lower time frame, on a 15 minutes, you can see also, even better, that this area acted as a support, as a resistance many times in the past. So what I'm gonna be looking for is a kind of pullback into this area right here. Even better if it comes around our pivot point. So if I have to choose, this is going to be even a closer and better area for me, where I'm gonna be looking for, again, a kind of exhaustion that highlight that this market could potentially, let's say, running out of steam, and give me an entry reason in the buying direction. Now, you can even go a little bit farther, and if you are a day trader, you can even use a 1000 tick chart, which I have already identified before. And if you are familiar with this kind of movement, we have our X point right here, starting from this one. Okay, we draw our Fibonacci from X to A. We can see clearly that we touched the 50% fibs, and if you draw also a Fibonacci extension and back down once again into the X point, we see that we haven't closed above 1414. So this means that if this market is going to be willing to come down around this area right here, a little bit higher than the pivot point, we also have another harmonic pattern completion in this, and this time it's going to be in the forms of a cipher pattern. We got our X, A, B, C, D down at 786. And again, as you can see this time, we've got 886 that is exactly on our pivot points. So again, there's no right or wrong entry. You can decide to enter, aggressively at market at 2916.75. As soon as the market gets there, you're gonna be, let's say, already in with a limit order. Or you can, let's say, decide to look for a more conservative entry reason and find, let's say, some kind of other ways, or let's say you're looking for an exhaustion around this area here in order for you to shoot once again for new high. This is going to be one of the trade that I'm going to be looking for next week. And as, let me delete this line here so you can see a little bit better. As target, what I'm gonna be looking for, of course, is going to be this area right here, okay? And also, if you consider our risk reward, so if you consider our pivot points now, let's say that your stop loss is going to be here. I still don't know, so I don't know where it's gonna be, but just for an idea. We've got our risk, which is about, let's say, almost 8 points, and our reward is going to be quite big. And we also have, say, we have about 3 times our risk. Now, it's difficult to, have a specific risk reward because we still don't know if the market is gonna get there and how the market is going to get there. But if this will happen in this upcoming week, this is going to be one of the trade that I'm gonna be looking for. All right. Sharing with you another market this time. Let me share with you Nasdaq, and let's start again from the daily. We are in a kind of different situation this time, because if you, let me draw this line for you so you can see better. The line that I just pointed out is the beginning of the year, beginning of 2020. And if I draw an horizontal line from the opening, as you can see, if you're going to consider the beginning of the year, we are already erased our losses. So we are about, if you, let's say, bought this market at the beginning of the year for a portfolio rebalance, if you like, you would already be up more than 5% by the time I am speaking. So even though on the street there is problems, okay, related to coronavirus, and the situation didn't change a dime, as you can see, financial market thinks a little bit different, okay? Because from financial market point of view, Wall Street is already positive, and if you have your money tied up into the Nasdaq Composite and you invested this money at the beginning of 2020, you were already up about, again, 5%. With that being said, what I'm gonna be looking for, let's say, this market next week, is this kind of area right here. Let me highlight it with a different color. As you can see, this is a daily chart of the Nasdaq. We had a tiny little gap, okay, on a daily basis. And also, if you draw a line here, as you can see, we also found a little bit of support in the same area, and we also had 94 even handle. So we've got, see, 3 reasons why this area could be an interesting point if the market is likely, let's say, to get there. As you can see also here, as on the S&P, as in the S&P, we are in an uptrend, so we are creating new higher high and higher low every time. So after having identified that this market is in an uptrend, where this market is likely to get to, this is the area that I have personally identified. Now, if we drop down a time frame, we can see a little bit better that we already found support onto previous structure high. So we already broke through, we bounced back off, and we are now almost creating new high. If we drop down another time frame, what I'm gonna be looking for next week, so we have identified this red box as a potential area of a target. What I'm gonna be looking for, as it was on the S&P, is some kind of, at the moment, what I'm gonna be looking for is a breakthrough this previous structure high. So once the market confirm me, okay, with a break and close above the structure, what I'm gonna be looking for, if I drop down another time frame, this time on the 15 minutes, you can see a little bit clearer. As you can see also here, we have this area which has been felt in the past already. So it acted as a resistance right here, right here as well. And we now broke through this area of resistance. So if now we are willing, if the market is willing to break through previous structure potential resistance up here, what I'm gonna be looking for is a pullback into right around this area here, and what I'm gonna be looking for, again as it was on the S&P, is some kind of entry resistance, some kind of exhaustion, okay, of the pullback, in order for me to give me the chance to ride this market and hop on the trade, looking to, let's say, drive this market up to this red box. I'm not saying, by the way, that I will ride this market from here to here, because everything could happen in this market. So I am gonna be protecting myself in case this happens and the market, let's say, start to roll over in my direction. I'm gonna protect myself, moving my stop loss over and over again until I will be either or stopped out with a profit, or I will end up, say, taking target around this red area right here. Alright guys, so those two are the potential entry that I'm gonna be looking for, let's say, hop on the market next week. If you enjoyed the video and if you have any kind of question for me, please do let me know in the comment below. If you enjoyed the video, please don't forget to smash that like button for me. And if you are new, once again, if you haven't done this already, let me remind you to subscribe to the channel so you won't be missed out any new episode. This is Fabio Mezzogori. Thank you so much for watching until the end. Trade safe, and I'll talk to you soon. I hope you enjoyed this video, guys. I put a lot of valuable information here on YouTube that help you to move the needle towards financial freedom or financial independence. So if you'd like me to notify you every time a new video is up, make sure to hit subscribe and turn on notifications so you will not miss any new episode. And also, don't forget to smash that like button for me. Thanks for watching, and I'll see you in the next one.